Prestige Wealth Management and KCMN Radio present an interview with Nick Naseman, Investor Coach. You can catch us every week on local radio or on the web between 12 and 1 on Wednesdays. And now here he is.
All right, we're back, 571-9975, bargainradionetwork.com, and we have Nick here with Prestige Wealth Management. How are you doing today, Nick? Let me turn you on first here. There you go.
Good, Rich. How you doing today?
Doing well so far. So,
good.
What's new out there in the world of wealth management?
A lot of volatility, a lot of scared folks, a lot of people making a lot of money, but not necessarily the right people.
That's right.
Not the investors.
Yeah, it's the machines that do it now, those automatic investing things they got going on.
Oh, yeah.
I don't understand that. Yeah. I mean, I just don't get it.
Yeah, anymore. There's no human in the loop anymore.
Yeah, I know. And it's scary because what's really controlling the market? Is it just, a couple large investors, or is it actually the demand and the company performance?
That's a hard question to answer.
Yeah. So, but there's still ways to get. You still need to be investing. You still need to be managing your money. You cannot, keep it in a sack in your bedroom. It doesn't work, especially if you want to grow it. It doesn't grow if you water it. So, got to get that going. So, what do you got there? You got something about the investor's dilemma.
Well, yeah. What I want to touch on today is the investor's dilemma, which is basically it's a seven-stage cycle that a lot of investors today are getting caught in. And it starts out with fear of the future, which, as you can imagine, everybody today, or almost everybody today, has a definite sense of uncertainty about their financial future.
No doubt.
And that leads to a lot of different problems. And the first one it leads to is forecasting the future. Because as you can imagine, with not knowing what the future is going to be like, it'd be nice to have somebody that could tell you what the future is going to be.
Well, no doubt. And we have according to the History Channel, the Mayan calendar ends next year, so you don't need to invest anymore.
Well, that's true.
It's over, so why bother?
Yeah, somehow I doubt that's going to come.
Yeah, I don't think so either. And, it doesn't work.
Even Nostradamus was wrong more than he was right.
That's right. And and whether he was right or not, who even knows? But I mean, it depends on how you interpret it, but we're off the subject there.
Absolutely. Well, that's fine. And so forecasting the future is one of the problems, is the second stage in the dilemma, the investor's dilemma. And that is, with the fear of the future so prevalent, a lot of investors are looking for somebody to tell them what's going to happen. And
if you can be right about that, you make a lot of money. And there's going to be a range of things that happen. You have to prepare for everything.
The market is random. Nobody can tell you what it's going to do next week, next year.
Right.
Over the long term, though, it will rise, and that's our philosophy. But we don't focus on what it's going to do in the next 2 years or the next 2 months.
Right.
We believe in staying invested for the long term.
That's right. Well, if you're really managing your wealth, 2 months isn't really a concern.
That's right. And if your time horizon is less than a couple of years, then there are better investments to be in than the stock market.
Correct.
Honestly.
No.
Because the cycle now is anywhere 3 to 5 years.
Mm-hmm.
So you'd need to stay out of the market if you have such a short time horizon.
Yeah, so you'd say it's mostly obviously for retirement investing and things like that over the long term. So.
Absolutely.
Yeah.
It is the best long-term growth vehicle out there
if
you stay invested and if you stay disciplined.
Right.
That's the problem with most investors today. They listen to the TV. They listen to somebody that says they can stock pick or market time, and they end up chasing returns, and in the long run, they just lose money.
That's right. There's no one that can do that effectively unless they have insider information. If they have insider information, you get in trouble for doing that.
That's right. They won't do it for very long.
That's right. So that is not the way to be doing the stock market. And over the period of the stock market, it's the average return isn't like 12% if you look at it from the beginning to now.
Well,
with obviously ups and downs,
yeah. If you look at Dalbar did an actual study on that. Dalbar is a financial services research firm, and they looked at a 20-year period from 1991 to 2010. The S&P averaged 9.14%, which is not a bad return.
Not at all.
However, the average investor only realized 3.83.
Only realized. So what is?
That's what they received on their funds
or
on their investments.
Instead of investing in the S&P, they were chasing stocks, as we were talking
Absolutely,
about.
because they change.
Right.
They would chase a fund performer. there was another firm here that did a big study that concluded this earlier this year, and they said, let me find it here. The top 30 funds from 1991 to 2000 had an average return of 25.5%.
Well,
while the S&P did 18.4. So that's a good return in and of itself.
Right.
However, they looked at those same top 30 funds from the years 2001 to 2010, the next 10 years, and they only did 0.43%.
Okay.
Versus the S&P 3.63.
Okay.
So what that says is no fund manager can consistently pick the right stocks.
Well, it's not possible, like we were talking about. It's not possible without insider information. So if you've got someone that's telling you, I can pick stock, it just doesn't happen. I'd like to see their performance. I mean, if someone tells you that, I want to see your performance.
Right.
Over the long term, not these 3 good ones you had, and
Absolutely.
all of them.
And there's all sorts of studies, academic studies out there, objective studies that show that long-term investments, stock picking, market timing just does not work.
Right. So what do you suggest? I guess it depends on everybody, but is it index funds or is it a combination of so many things?
There's really 3 simple rules, and just like dieting, eat less than you burn calories and you'll lose weight. However, that's not that easy.
Right.
The 3 simple rules to investing: own equities, because they're the best long-term investment out there.
Sure.
Diversify. You can't put all of your eggs in one basket. You know, gold may sound good, but if you own 100% gold, then you're not going to go anywhere.
That's right.
And then you have to periodically rebalance. And when you rebalance, you realize the ultimate goal: you buy low and sell high.
Right.
So
exactly. Makes sense.
It's that simple, but it's not simple because it takes discipline.
That's right. And it takes someone looking out for you too.
It does.
I mean, that's the thing. I look at E-Trade. You can set up your own accounts, all this stuff. Unless you have full time to study the market, it doesn't make a lot of sense. Yes, you get cheap trades. Okay, yes, you do. But you have to know what you're trading, or you're going to get killed. It's gambling if you don't know what you're doing.
Absolutely.
Instead of
and
investing.
There's such a wide range of material out there. You just don't know what to believe.
Right.
And the marketers and the advertisers are very, very intelligent people.
Of course.
And sometimes I wish the money managers were half as smart as the advertisers, and everybody would be making all sorts of money.
That's right. No doubt. So, but it is, it just sounds so great. I'll do my own stuff. I'll do your online research and all that. That's just, I don't think that's my personal opinion. I think it'd be better off.
And that's the truth of it. If you have somebody else looking out for you, a good coach, they can take the emotion out of the investing.
Yeah.
And that's the key to it.
That's a good idea. You're right.
You become objective. You take that emotion out, and you help the investor focus on their long-range goals.
Right, and rely on someone who has the expertise, who studies this all the time, who spends their day doing this, rather than you at the end. At the end of the day, exactly. At the end of the day, you read the paper and figure out this one's going up. No, that's not the way to do it. Have a professional do it for you. So. We keep getting off course here. The investor's dilemma. I guess we're sort of covering it anyway.
That's okay.
But
we're covering all seven stages of the cycle. The another stage of the cycle was track record investing, which we covered. Looking at the 10-year best performers are often not the best 10-year performers in the next 10 years. The information overload. There is so much information out there, and the mutual fund companies and the fund managers are very good at burying the information that they don't want you to see.
Of course.
There was also a study done over the last 50 or so years. The bottom 200 mutual funds had an average return of 77% negative. But you don't see that because what they do is they put those funds' assets into another fund.
Right.
That's why there are so many new funds out there, and they just bury the results, and they're never reported anywhere.
Right.
So that's a huge problem.
Yeah.
And the emotion-based decisions, we've talked about that.
Yep.
That's what a coach will do for you.
Yep.
He'll keep you in line.
Well, you always hear about the guys. It's just sort of like when people go to Cripple Creek. You hear about the days when they make 30 grand. You don't hear about the 30 other days where they lost 25 grand or whatever.
That's right.
And that's the thing. You hear someone, I picked stocks and I made money on this, this, and this, and it's like, well, what else happened? No
Absolutely.
one wants to talk about
they don't
it,
take into account their losers or the cost of actual trading to get there.
Exactly, and that's a big problem too.
And the cost can really eat into your portfolio.
Right.
The average stock mutual fund in the United States has a turnover of over 100%.
Wow.
And that can easily eat up over 2% of your returns. And that's not reported to the average investor.
No. Well, they always say no load mutual funds. What exactly does that mean?
Well, that means there's no front end load, no
Right.
sales charge.
But they take it out of
There
the
are still
returns.
fees
Oh,
in
yeah.
there.
So
There's
you-
trading fees and administrative fees, 12B1 fees.
Right.
They're all in there.
Is there incentive for mutual fund managers to actually trade more because they make the trading money as well?
Absolutely.
Yeah, see, that is
The
not
mutual fund
right.
companies and the brokerage houses, the more they trade, the more they make.
See, that is, I don't know. I mean, not to say that there's anything, anybody's doing things like that, but churning just to make money, I guarantee it happens somewhere.
That's true. And there are some funds out there. We use some funds that there are no trading costs associated with it.
Mm-hmm.
It's all built in to the underlying fee.
But there
And
again, you know about them, and
Absolutely.
I don't. I know where they are.
all of our clients, we have a 100% disclosure policy. So the first thing we do is sit down with you and compare your policy or your portfolio to what we can offer and look at the fees. We'll show you the fees that you're paying.
Right.
We had a individual come in just a couple weeks ago. Thought he was well diversified because he had 5 different mutual funds. We did a total analysis of his portfolio, and it ended up that a lot of his mutual funds were holding the same securities. So he was a little shocked in that area. And he said he was only paying a minimal amount of fees. He said 1% he was paying to his advisor and $25 annual fee. Well, we did a cost analysis, and he was paying over 4% a year. And that just
That's
totally
amazing.
shocked him.
Well, yes, because everyone thinks no load means you don't pay. Not true.
Right. The fees are in there.
Right.
And something else that we do that I'd like to bring up is for small business owners on their 401k plans. There's some rules that are going to be changing next year that are requiring 100% disclosure to the 401k programs. And we can do that cost comparison for you at no charge, just to show you what you are paying. Because there can be up to 17 different fees in a 401k plan.
I'm sure, yeah.
And right now the laws require only 2 to 3 of those be disclosed.
That's amazing. Why don't they require all of them to be disclosed? Plus, just the fact that it's the honest thing to do,
That's true. But there's salesmen out there, and salesmen play a big part in the world.
That's right, they
if
do.
you know who you're dealing with.
Yeah.
As long as you know they're a salesman, then you're fine.
Absolutely. So, all right. Well, what else we got there? We've got a couple minutes left here.
Well, we're having a meeting next week on Thursday, 1 o'clock and 6 o'clock.
Okay.
You can call our office to make a reservation. We're going to have a guest speaker come out and talk about the myths of investing and what you can do to prevent those myths. There's no selling at this. It's a purely educational series. It's one of our series that we have of meetings. For those clients that become our clients, or those individuals that become our clients, we've got a very structured educational program that consists of over 48 different lectures that we expect them to attend.
Nice. Well, they have a responsibility in what's going on as well. So, where are these happening at? Where's this?
They're going to
happening?
be up on the north end of town at the Best Western Academy Hotel.
Okay. All right.
And just call our office to RSVP because there'll be some light snacks and sandwiches served. So we just need to make sure that we have the right amount of food ordered.
Absolutely. And you can call us 571-9975 and we'll get you in touch with Nick. Nick, what is your phone number?
It is 719-434-3939.
All right. Well, Nick, thanks for coming in again today. As always, find someone you trust to invest with. Just don't do it, and it's a mistake to do it on your own. So, and take advantage of the educational opportunities that Nick is presenting here too. So, if you have any questions, 571-9975. We're going to be back in just a couple minutes. Thanks for listening.